Well, I would certainly acknowledge they are not great for sentiment, as we can see these days. But I think it's really, and not many observers seem to be talking about this, but I think it's instructive to take a step back. What is the situation in the U.S.? Well, we're heading towards an election where the economy is not doing so well for obvious reasons, or corona-related. So, and at the same time, the political landscape suggests that if you sound tough in the relationship on China, this might be beneficial. But if you look at it purely from an economic or also profit point of view, stock markets in that sense, you notice that actually staying away this time from trade measures, or basically measures that will very, very clearly affect both economies, so including the U.S. So far, nobody's really talking much about this. Everything is about a different level where it's much more difficult for us as analysts or economists to have to make a negative connection. So therefore, there's a lot of noise. I fully understand it, but I'd say, as long as I struggle to really link this to very clear downside, nobody has downgraded their earnings either because of it. Right? I think, okay, let the sentiment be affected, but as long as the fundamentals are not, no reason to be too nervous about it.
Yeah, but you could say the trouble is we're not getting earnings downgrades, but we're hardly getting any visibility on earnings because many corporates are saying it's just too difficult to predict still with the uncertainty tied to the COVID-19 pandemic. Based on your own earnings expectations, though, how is that playing into the way in which you are investing?
Yeah, we have for this year, for example, APAC, or Asia ex-Japan, I should say, roughly flat, even if you count in a little bit of currency moves, which makes it stand out from pretty much all the other regions. What we've also done, and I think this is an interesting exercise, according to our forecast, if we compare end of next year's earnings level to 2019, right? So how much do we gain back potentially? What stands out is Europe, we reckon, will reach about 75%. So clearly, even end of next year, be quite a bit below the 19 level. And by the way, this is a least preferred region for us right now, the EMU. So U.S. and global around flat, and actually Asia flat this year and growing 17% next year. So basically, you're at 117%. So also from an earnings trajectory point of view, makes a good case for APAC for the region.